thinking every single day, but with a different angle. Sometimes, as you know, we bring on a founder, and sometimes that founder will talk about their personal story. Other times that I'll ramble on for hours and talk about all of the things that are happening inside Expert Dojo. And sometimes we'll bring you a specific growth expert. Today's going to be a super duper awesome, incredible show because we're going to bring you in a growth expert. And it's one of my favorite types of growth experts. And I want to talk a little bit about Kirsten for a second. And then I want to lean into some of the things that happened last week that really tie into this. So, first of all, she is going to speak to you about having the right financial modeling. There's actually nothing more important than financial modeling when you get yourself started in your company. Nothing more important. Everything is math. And you have to realize it seems like, because this is a highly emotional endeavor, because you go through hell every single time to make sure that you're not like drowning in the closest puddle. And it feels like feel. But in reality, all of this is math. And the math is really simple. Two types of companies, really. There's the types of companies that are non-venture backable companies, and then there are the types of companies that are extremely venture backable. The ones that are extremely venture backable are the ones that are growing at 100, 200, maybe 300% annually. As you get bigger, if you're even growing at 50 to 75% annually, you're still doing incredible. But there has to be a large amount of annual growth. That is what you promise. That is why somebody is giving you a valuation of 5 million, 10 million, 15 million, 20 million at the beginning, when in reality, your own mom wouldn't give you $20 for what your business is worth today. It's because everybody is valuing it based on the future opportunity of the organization. Okay, so you got to do it with math, and everything is math. The beginning, first of all, the end part of it, when you're looking at the growth, think about how that growth works. If you have a company doing $20,000 a month, and then you do 200% growth, well, that's $60,000 a month, right? $40,000 a month on top of $20,000 a month. And then let's say the next year you just do 100% growth. Well, that brings your $60,000 a month to $120,000 a month. And then let's say the next year you end up doing growth of another 100% to make it really easy, which brings you up to 240. And then the next year you do 200% growth, which brings you up to 820. And then now you're like 720. And then after that, 100% growth brings you up to 1.4 million and change. Suddenly you are a hugely venture backable company because you're following the rules. Now, there are the rules at the end, but if you go back to the beginning, to get to that type of revenue, you have to have an increase in the amount of customers that are coming on board, or you have to have an increase in the retention that you're getting. You also have to have more closed deals. You also have to have more meetings, and then you have to have more prospects, and then you have to have more outreach. Every single thing you do on revenue ties directly into math and financial modeling, whether you love it as a creative or whether you absolutely hate it as a creative. That's what you got to go to. And when you look at your expenses, it works the same way. Your choices between hiring a person that's going to be $200,000 a year, or a person that you're going to hire in a country where you can do it at a much lower price, but you would get a worse or a lower impact, that ties into the financial modeling as well. Every single thing is financial modeling. And as founders, the more you realize that, the more you are going to do great. Now, there are a ton of things that you can do to impact that financial modeling. And I'll dig into it, a ton of them, everything from building your domain dominance to changing up the different channels that you're going after. A lot of the things you see me go through week after week are focusing on different channels that we're looking at. And does email, does it outplay cold calling? Does cold calling outplay automated dialing systems? If you built in email sequences, is that going to increase the conversion that you're going to have? What do all these things have in common? Math, and a little bit more math. So without further ado, I want to bring Kirsten into the conversation, and we are going to talk about how we make this math work for people, because I think it's like super hard, Kirsten. Like when you have folks starting companies, they start it as creative beasts and they want to change the world, and there's like purpose, and then there's brand, which is messaging, and then there's huge why, and everybody's going, oh my god, this is great. And that's like step one. And then step two is I got to buy t-shirts with our logo on it, and then maybe a hat. I got hats in the corner. And then like step three is, oh, we better raise money. And what you and I are trying to do here is change that so that step one to step two is a little bit faster. Step two is replaced with buying hats and buying t-shirts with actually building a financial model. And step three is actually having the customer as the one that's giving you the revenue so that you can drive revenue yourself.
Exactly.
So welcome.
Thank you.
Can you actually, before we kick into this, share a little bit about yourself? You are a financial modeling freak, and I mean that in the most wonderful way, because I aspire to be. And everything for you is a number. But talk to us a little bit about your background, about why you love financial modeling so much, about why founders should need it so much, and then we're going to dig into a conversation which will hopefully give lots of tips and growth hacks for founders about how they build out, how they finish this today and make after this the first morning of the rest of their life, where the only thing they start with on the day is numbers.
I would love that. First, I want to say is that financial modeling is for everyone. So every founder can do this. I will say you don't need to be a spreadsheet wizard. I am not a spreadsheet wizard. Like, I am mediocre at best with spreadsheets. And I think that that's what intimidates a lot of folks when they think I need to make a model, and they're like, oh, but I don't know how to, I know a few formulas, or they'll download a template, which we could talk about later why that's not a good idea. So there are apps out there, and I have one that I specifically think is like the winning app, but like, use an app. Like, we use apps for everything. Apps are basically just spreadsheets, but like in beautiful UX. Like, they've done the work for us. So I just want to like let everyone know that's watching this, you can actually figure this out. This is not going to be the barrier that stops your business. And in theory, if you do this clever enough, it should be what gets you over the hump, what actually is maybe your secret sauce. It'll weather weird economic times, which none of us know anything about lately. Yeah. So I just want, my background is that I actually came from owning a business a long time ago, and then got into accounting, and then realized that this was the missing piece for everybody, for clients, for my previous business. And that's, I think, why I'm passionate about it, is because I come from owning a bootstrapped business, and then my current business is bootstrapped, but I want to help fundraise companies and bootstrap companies have a plan. Like, that's basically what it is you're saying, here's my roadmap, here's my architecture of what I hope my business will do. If a founder can't do that, then that's a mindset problem. And so, like, we got to step back and be like, well, why can't you get into the nitty gritty of like how your plan is going to work? Because that is, at the end of the day, what a business is. And it could be fundraising. You don't have to be profitable. I'm not like, you just need to have a plan. Like, I'm going to build this thing that's going to cost me this much money, and I'm going to sell it for this much money, and I'm going to make a profit eventually. Either if you're bootstrapped, it's got to be immediately, or if you're fundraised, it's got to be a hockey stick, or like, path to profitability. But if you can't do that, then you probably should get out of trying to be a founder for a business.
Yeah.
I know that's a hard lesson, but I will say this is for everybody. So just know that you can do it. But if you can't do that, then do something else.
I love that you said this is for everybody. It made me think of a dog. Actually, it's like, a dog isn't for everyone. A dog is not just for Christmas; it's for the whole year, right? And it's
yes.
like, this is not just for like
right.
first thing on a Monday
the holiday.
Morning. This is like, you don't. And here's what's so bizarre. Actually, you kind of get me thinking about
this
like
is a perfect analogy. I love this
craziness of the world that we're in. Like, so if so what Kirsten just mentioned there is bootstrapped companies, right? A bootstrap company is actually a normal company. It's a real company. It's someone that has a product, they have expenses, they have revenue, and it's very normal for them to run the company like they would run a home, right? It's like, hey, my rent is so much, my gas, my electricity, my energy is so much, my food is so much, this is how much money I've got in. I have to balance these books. And if I'm not balancing the books, I'm not missing it by much. Like, I don't have the option of continually getting more and more and more loans so that I can pay for a lifestyle that I've badly managed, right? Most bootstrapped companies are highly aware of proper financial management and financial modeling. The problem is venture backable companies, because companies are educated badly. I actually I had one company, which is entirely on me, right? A company in our cohort from the very early stages. And he raised like $3 or $4 million. And he called me up a couple of weeks ago. And he's like, hey, Brian, we didn't make it. It was so bad, it was the war really affected us, and the environment really affected us. And like and by the way, he was not Ukrainian. And so he's like, the war affected us, all this stuff. And then he's like, and he says, so, I don't think we're going to be able to make it. And I'm like, look, I get it. We lost our money. It's fine. I have no problem there. You tried, you gave it a couple of years, but can we have an honest moment here? You failed because you fucked up. You didn't fail because of the war. How many customers did you have? Oh, well, we didn't get to customers because we were working on our product. Okay, so why don't you just be honest? Nobody on the fucking planet cared about what I was selling. That's the real problem, right? And it's not that like fundraising market got really bad and people stopped giving you money. Like, fine, if we're homeless on the side of the street, that's your reasoning, right? Nobody gave me money when I put my hand out, but you're not homeless. You're building a company, and that company has got to have value. And so if you approach this, and what you just said there about mindset is like so important, because there is this mindset in the world today, not just with founders, VCs, all of us.
Entitlement.
Entitlement. People will just give us stuff all the time. And by the way, this is not bootstrap founders. You people are awesome, right? Because you understand you have to fight through this trench yourself. I'm talking about venture backable founders who have been trained to raise money. And that becomes the thing that defines your success. And what Kirsten is talking about is, she's like, don't do that. Approach this from a financial modeling perspective. You have to bring in a certain amount of revenue within a period of time, or you will not be able to achieve your expenses. You don't want to be held for ransom every time the economy comes down and the valuation of your company drops by 90%. You don't want to do that. You don't want to have to fire 300 people when you get to a certain size and you realize that there isn't the amount of liquidity in the market there was before. You want to build a great company. And I'll give one example, and then I want to bring you back in again because I get a bit carried away with this, and you started me off. But one of my favorite founders.
These are good anecdotes for people to understand, and I think this is really common. And if you're listening to this and you're like before that bad cliff that he just described, then this will hopefully turn you around. Like, I hope that this catches a few folks, or if you're starting your startup journey, this will make you have a slightly different shift of perspective of how you're going to approach your business. Yeah.
I do. I really like this. This actually gets me more animated than even, and I love growth hacking, but like, this is the fundamental basis of everything. Because it's not, by the way, I'm not even speaking as an investor. I'm speaking as your husband, your wife, your kids, your mom, your dad, your friends. I'm speaking as you. Like, why do you want to waste your life going after this product where the whole principle of your success is reliant on other people giving you money, right? And I'm not saying you shouldn't take money as a boost to drive your business forward. What I'm saying is you have to financially model based on the value that you're bringing to the world. And then we can add in these boosts that we have afterwards. And so, yeah, I really love how you've just, this is my first tip for today for everyone to take away from what Kirsten has said, is this is about mindset first and foremost. If your mindset is in a place of, we need to reach a place of sustainability. I call it optionality, right? And optionality means that you're building out a model that allows you to grow. It's not that you can't ask investors for money. It's that you can't be reliant on begging as your product, right? It is a happy medium between building a financial model of the company that you're going to be growing up, and also being able to layer on top fundraising onto that, which is as a booster, as a turbo, as something that's actually engaging growth loops that you're already building, which fit into that financial modeling that can push it up. I have a
And
great
for
company
folks
that I
that are
want
new
to
to
talk
this,
about. You have
that's
who do you
that's
have that
called
you want to?
scenarios.
Yeah,
Yeah, so like what he just described is called scenarios, if you've heard that term. So
I
like
love.
in your like when you're making this model, and maybe we should go back and explain what a model is. Should I do
Yes,
that real quick? Okay.
yes,
So a model is different than financial reports. I think a lot of people and investors make founders misunderstand that. I think it's like perpetuated. I saw that question. We can get to that soon. Um, so financial reports are either what actually happened or what you're projecting to happen, but they're kind of like they're just reports that you've seen. They're just line items of like, here's the revenue coming in and here's the expenses and here's our assets and here's various liabilities or whatever. And they're just and the cash flow might be like, here's when the money's coming in. But that's not a model. A model is all the steps you do before, like what he was saying, that it's the end part of it. A model is like all the steps you do to get to those numbers, and it's your assumptions and your projections of the unit economics of what then makes that revenue, what then makes that expense, what is your marketing spend, what is your lifetime value of that customer. Because you can't just say, I'm gonna make a thing, and then this is not the real world. You can't just be like, every month it's going to increase by a quantity of 5. You have churn, you have lifetime value that ends. So eventually those customers are going to end off and you need to replace them. So that's all the unit economics of what comes into like what your actual numbers are. So that's the game plan that I think that we're talking about here when you're saying a model. Model is like a whole composition, a 3-dimensional world of your business, of like, how is this actually going to work in the world that we exist right now. In a different universe, something else could exist, but we're just stuck in the one that we have, the economy we have, the mindsets of the customers that we have, for good or for bad, whatever that is. So I hope that explains a little bit. Like when we're talking about a model, we're talking about stepping back and really making the plan of like, how is this really going to work? Also, and Brian can touch upon this, like you can change that, but at least have a plan to start, so you have a plan that you can then change.
I love that.
Yeah.
So again, following this in sequence. Number one, mindset. Every founder has to approach your startup every single day from a mindset of modeling. You have to. You can't approach it from a mindset of creativity. If you do it from a mindset of modeling, it doesn't take away from your customer engagement or your creativity or your outbound or anything. It actually really adds to it. But if you approach it from that perspective, you will always be thinking, okay, cool. I know I got to do 100 to 200% growth, which is really 10 to 20% monthly growth, which is really like 0.3% daily growth. Like when you start doing that, you then know what you have to grow by. And then you're like, okay, cool. Now, the second point that Kirsten has just brought up, which is the model itself. It doesn't have to be a huge, complicated, big, long model. It actually shouldn't be, to her point. They should be very simple rules that you are following, which are financially based rules. And when you do that, you will bring that point, that 0.3% growth that you need to have every single month to be every single day, to get to the 10% growth that you need every single month. You can then start measuring that versus what you need to spend and versus how well the channels are working for you. It's so cool. Because those of you who love chess, you understand, like this is exactly the way you play a chess game. You don't go in to say, oh, I've got all these pieces, I'm just going to go at it and see what happens.
Yeah.
No, because every single chess piece has a financial value, or at least has a value, a currency value that they have on the board. And then I really like your third point, which is that the model should be changed on a very regular basis. Like Donald Trump coming into office, we are now beyond the stage of whether you love him or whether you don't love him. It's irrelevant. What is relevant is that midway through January, there is a new sheriff in town. And how does that affect your company? How can you maximize the value of what can come from that to be able to benefit yourself? Right?
There's
And
going to
so
be
talk
tax
to me about
cuts.
how you do that. Talk to me about
Yeah,
the tactics that you can use to adapt to changes, both in political changes. They could be investment environments that are changing. It could be recessions that are coming in. It could be competitive changes. Like, how do you adapt the financial model to follow those?
exactly. So just a heads up for everyone, on a accounting side, there's going to most likely be tax code changes. So be aware, and figure out what that's going to be. And then again, I don't know if this tariff thing is going to happen or not. People are counting on it. I sure hope it doesn't, but that is obviously going to affect a lot of things. I heard a story from a colleague saying that this like large company, no one's going to get their bonuses because the owner has to buy tons of inventory ahead of time. So like no employee's going to get a bonus for Christmas. Like I don't
Bah
like.
humbug. Bah humbug.
I mean,
Come on. Get
like
out
that's
of
a
here.
terrible anecdote. Yeah, like that's, I heard
Bad
it like 2 days
person.
ago. So, and
I
again,
just
like
don't give, I don't give bonuses for no reason. That's a much better, that's a much
right,
better
no
boss.
bonuses. Like, but like again, like, do we even know if these tariffs? I mean, I know that that was the platform, but do we know if that's actually going to happen? Because it takes a lot to make a tariff go happen. So, this is where what he just asked about, the scenarios come in handy. So you can take your model and you can make in a perfect world, this is what's going to happen. And then in theory, a model is supposed to be 5 years out. Honestly, your first couple years are going to be more granular and detailed, and the rest are just going to be like the multiplier. And you're going to be like, in theory, if it just keeps going in these directions, this will be what happens. Like for every new X amount of customers, we're going to hire an offshore developer or an offshore customer manager, or, like you will multiply these things out and you'll just be like, I'm going to assume that this is going to keep going. But every quarter is my recommendation, is where you look to see what say you're like, okay, I'm going to do Instagram ads and I expect it to be this many sales to come from those Instagram ads. You're going to look to see, like, did I hit that? Did I exceed it? Did I fail it? So you do want to keep revising to see every quarter, is my suggestion, on what you actually did. The app that I use for financial modeling integrates to the accounting software. So bam, it's like the actual activity is already there. You can look at it. You can, put things on a piece of paper depending on how you learn and absorb information. And then what you want to do is copy that scenario and be like, I call it the good, bad, and the ugly.
Yeah.
So that helps anyone just to think of like, what are you doing? So you're doing the two scenario concepts. You're doing the good, bad, and the ugly. Like, if things go good, this is what it looks like. If things go like bad, or certain economic shifts, this is what it looks like. The ugly is, how do I just keep like the company existing until I can find some kind of hack to get it back on its feet? So rather than closing down shop. And I think that that's a good scenario to have, because your very, very bottom line, like whatever, like the most minimum it is you need just to keep existing. And I think that a lot of founders only think of the good, or maybe the like semi good, and then the second things drop, they give up. They throw their hands up in the air, like, we don't know what to do, we're just going to give up. But like, you can actually, if you're clever enough and you have savings and you plan this out and you plan your financials out in a way that you can like eke by until something changes, I don't know what, like you close a deal, something shifts in the economy, your competitor dies, like something that happens, you can like still exist. You don't have to completely close your doors. And then the other scenarios that you want to do is, what happens if I make this full ERP system, for example, or do I just make an AI bot that goes over someone else's ERP system? So make like product scenarios as well, because you may be like, in order to do this ERP system, I need $5 million, and you're not going to raise that. So then you're like, okay, fine, I will just make an AI bot that goes over someone else's, make that profitable. And then my phase 2 of my business is going to be enough that I can self-fund to create that, buy the developers to create the ERP, or eventually raise enough capital to make that. So you'll want to do a variety of massaging, I suppose, a variety of like looking at what these options are.
So we've now got four things, and I'm really underlining these because I would like everybody to be listening to this to have this as the way you live your life. We have at the very beginning, your mindset has to be in this place. Then we got to modeling. Then we got to adaptive modeling. And adaptive modeling is really just looking at what's happening around you and saying, what do I have to change? Like we know if you were in crypto right now, you know that Donald Trump coming into power means you have to do adaptive modeling immediately. Everything has changed. Bitcoin is going through the roof. Everybody's getting ready for a bull run. It is going to be insane. And so you have to adapt, even if we felt things were going to happen before. And the adapt might just be you're going to get your developers to move twice as fast, which could even be at twice the cost. But actually, you can get 3 times the return that will come from that by having it a month early. So it's worth it. That is adaptive modeling, which is just moving from the general modeling. Now, Kirsten has gone one step further and she's talking about scenario modeling. And the scenario modeling, let me give you a real example. I want to give you an example of somebody who does it really well, and then someone like me who fumbles through on a daily basis, right? So my favorite company is a fellow called Nacho, started off Blair's Dev. Blair's Dev are a recruitment firm out of Latin America, never raised any money. I think they're going to do like 500 million in revenue this year or something. They're a unicorn company, have done incredible, no VCs, no anything. He built it because they had an incredible product that customers loved, lovable product, right? They had an incredible conversion metrics, which was built on really strong systems. And they also had this incredible outreach through email where they were literally outreaching to hundreds of thousands of new contacts every single week. It's a whole different conversation to tell you how he did that, but that's how they built out this company where they were. Their scenario modeling and financial modeling and mindset was in a ridiculous place because they had no choice. They were doing it out of Argentina, I believe. They didn't have a ton of money to be able to build it, and they had to make sure that every single thing was built in based on numbers, right? Now, let me tell you us. We're a VC, and we're a VC that are growth hackers that pretty much give away most of our growth hacking for free. So for us to actually get great companies that will do well in the future, I don't think is that hard, honestly. I think we'll do fine. But for us to be able to turn a profit is really difficult because we're not charging for our services, right? We're giving most of the things that we have away for free, even though the entire academy that we put up, the only pricing that's on it is so that we can show a value to it, but we give it away for free. We give it to our founders, right? And so that in itself is an extremely hard thing to do. So we've been scenario modeling because we can't lose money forever. And so we're saying, well, should we create a separate marketing company over in India that we can provide services? We're looking at, should we create an experiential center in the front of Expert Dojo so that we can bring in revenue, but also stay with our brand? Should we also be leaning heavily into crypto? Because we know that's not really equity, it's immediate revenue that we can bring through if we back the right projects. And then that could also mitigate all of those things. Our mitigation, our scenario modeling. Now, we failed in 2024. So I come to you all from a place of humility, but we will not fail in 2025. In 2025, we will make a profit based on the provision of VC as a service, as will the people around us. So that's why I really want you to follow this model, because everything we're doing, even our 2025, we have a bullseye on the wall. And in the middle of the bullseye, it gives what we want our math to be for the IRR at the end of 25, internal rate of return. It's a VC measurement. We have what we want our math to be for AUM, assets under management. It is another VC measurement. And we have another one in the bullseye, which is the revenue that we want to bring in by the end of next year, which is only just over $1 million. We don't need much more than that to be able to do it. But all of those targets are immovable targets. And then everything around that then becomes the how. So when you move beyond, so I wanted, to really underscore this, but on the scenario planning, do you have any tools that you find are good tools to use or even methodologies for how people can look at like what is their scenario planning when they're building out for 2025 and they do not want to miss their numbers?
Yeah, and I think that wasn't that the question that came in. Let's make sure we address it.
Oh, let's bring it up. Okay, oh, actually it
Financial
was.
reporting and tax. Oh, that's a longer question. Well, let me at least first answer the one about the tools. So, like I
Yes.
said, you at the end of the day, you want to use something that's automated and integrated. So you want to use an app. I vetted tons of apps. I've used apps for, and I just want to point out something in case this concept isn't connecting the dots. Financial modeling and forecasting are basically the same thing. So when you think of those concepts of budgeting, forecasting, and financial modeling, those are all in the same realm of what you're doing. There's like little nuances for each one of those definitions, but I just wanted to point out that like you're basically looking at what Brian just said. You're looking at like, here's our targets, and then what is all the steps we're going to do and the intricacies to get to that target. So the app that I really recommend, and I just want to promote out, I get no spiffs, or I don't even have a promo code. I get nothing from it. I just think that they've won the market. It's called Finmark, Finmark. Bill.com acquired them, so you'll see a little logo that says Finmark by Bill or something like that on the top. Not sponsored, literally nothing. They're just honestly like the best of the breed. So that is an app that integrates. It is slick, it's correct, it's beautiful, its UX is great. It's going to actually get you, it has a bunch of just already made metrics that you want to use in there. So you have to like recreate formulas. And again, like I do not think, and I think I told you I had a conversation with a different, we'll not name them, a different accelerator. And apparently their founders want, the founders of the accelerator want the startup founders to be Excel geniuses. And I'm like, they got better things to do. This is illogical to me. I do not want my founders learning how to be an Excel wizard. I want them building their business. So that is what I'd recommend right there. The accounting app, I just want to throw a plug out that I recommend. Also, I think is the best to read is Xero. You all heard of QuickBooks, but honestly, Xero takes the cake. So I also really like to point people to look in that direction. And again, Finmark integrates with HubSpot, Gusto, Xero. It does integrate with QuickBooks, stuff like that. So like if you're looking for tools, that's a little bit of a software stack that I want to throw out there. Because I think that was the question, right? Specific tools and methods.
Yeah, that was. But also, you know, what I really like about what you're doing as well is you're connecting the dots for people. So it's of course, when we're doing financial modeling, or it is the forecast. You have to have a forecast, and you should have it broken down monthly, so you know what you're going to do every single month. It should be relatively granular. Like this is not to the exception. Is I think the big problem that I see with a lot of founders is that people will do their forecast and then they'll leave it. Right. So there's no connection to what you do today. Like my tools are this weekend, I had half an hour put aside for planning and strategy. And the only reason it's only half an hour is I was like so many emails and other bits and pieces. I would have done an hour and a half. And that time, you just need a whiteboard. Like you literally need a whiteboard. You need your arms folded. You need to sit back and you need to say, okay, how did last week go? Not last month, not 2 months ago, not last quarter. How did the last week go? Like what happened in the last 5 days that is really going to help me be able to make sure the next 5 days are okay? The scenario planning is not a one and done. The forecast is not a one done. The forecast tells you, it will tell me what we have to do in 2025 and what each month will look like. But it's my weekly revision and then adapting and then planning and then executing the following week, which I'll set aside time for, that actually allows me to nail it, because otherwise it's too hard.
I use my Sunday to plan my week as well. It feels really good. I know everyone's different. Some people really like to be productive on their Saturday. I tend to make my Saturday my day of errands or relaxing or my own day. But Sunday, I'm right back into it. So I'm with you. And I will say, oh, you're getting a little shout out. I will also say,
Thank you.
I call it like a napkin doodle, but like a whiteboard, a napkin, like a piece of paper, I myself am a creative, ironically, even though I do finance, but I actually am like natively a creative. So I'm a visual person. So whatever works for you, feel free to do your first draft on a whiteboard. Do your concepts on a piece of paper. Or if you want to put the concepts in a spreadsheet is still a very good tool. I just am trying to get people away from the spreadsheets being their dynamic tool, because there's just, while there, I've run into like high-tech people that will be like, but there's a macro or there's a thing that will integrate and dump my data into a spreadsheet. A spreadsheet is never, ever, ever going to be as sophisticated nor visually helpful as an app. And if you choose the right app like Finmark, it's going to really just get you to what you need to see right away. So yeah, I agree. Like, start whatever fits for you and the way your creative process is. Start there and then inch your way towards putting in the actuals of what are the targets I need to hit and what are the little sub steps that it's going to take to hit that.
I
Yeah,
love
100%
I love
agree with you.
Tell me, good founders, good examples of companies that you've seen following, like really good financial, like if you're like, these people, they killed it, like my Blair's dev, like what was it, the things that you saw them doing and maybe some of the obstacles that they ended up overcoming to actually be able to get over the other side? Because I don't think there's a single person listening to this who's thinking, oh, I don't want to do any financial modeling. And there's nobody who hasn't seen the change that we've gone through over the last year or 2 years or 3 years that doesn't believe that you need to have adaptive modeling and scenario planning, which is built in. And I'm totally convinced there's nobody who's now not thinking that every single Saturday or Sunday, they should be giving themselves alone time. Look, if the beach works for you, do the beach. If sitting in a rainy puddle works for you, sit in a rainy puddle. For me, it's a whiteboard. I like a whiteboard. I like to put it up. Everybody knows. And then what I do, because I'm super obsessive and like my team hate this, but I will then be like, this is what we have to do this week. Like this morning, I'm like, this is the most important thing in the entire world, because I knew. And actually what was bizarre was last week in a very random conversation, somebody mentioned a SPAC. And though, for those of you who don't know what a SPAC is a special purpose acquisition company, right? And so SPACs were super popular like 4 or 5 years ago, maybe 6 years ago. And then they destroyed, they were the worst thing ever, not because they were a bad vehicle, but because they put terrible companies into them and terrible projects into them. And then, so that was like a really big problem. So, but now that we're in a Trump world, and there's been no liquidity for 3 years, a well-done SPAC with a really good product is going to be killer. So that, to me,
I never thought about that. That's an interesting point.
Yeah, link in. So find the things that are happening, make a note of them, give yourself the quiet time, and then sit back and say, is there a huge opportunity there? That one opportunity could be worth $5 or $10 million to us, just that one thing. But it was because I didn't let just things happen and then get to the end of the week and say, phew, I made it to the end of the week. Every single thing that I use as my fuel for my internal scenario and adaptive strategy planning, everything comes from notes that I'm making from things that happened on the previous week, or stuff that didn't work.
So wait, you're saying like on a Tuesday, you might have like a flash and you're putting it on your whiteboard, and then you'll like circle back on Sunday and be like, what's all the downloads and the thoughts that came to me throughout the week? That's really clever, actually.
Yeah. You know what I use? I actually use the most basic, I use a Word document, which kind of, but it worked. It worked like literally this, like even now we will go through something that I'll think of. And my Word document is, listen how basic this is, right? It's embarrassing how basic this is. It will say, I will write Monday, Tuesday, Wednesday, Thursday, Friday. And I'll put my things to do by Monday, Tuesday, Wednesday, Thursday, Friday. I think I've got like 12 or 13, which are projects that need to be completed and moved from Monday today. And then I get to Tuesday, and then I get to Wednesday and Thursday and Friday. And then I'll throw stuff in for November and December and January. But it means, like, people will sometimes say to me, and I have a terrible memory and I'm awful for faces, and like, but I'll never remember anything, but I write it. But people think I have the greatest memory in the world, because they're like, I don't understand. How can you continually be reminding me like every single 3 weeks like it's clockwork. It's because I write it down. And I do the same thing for my scenario planning. I will have a note that will say, go through scenario planning so you can make sure that you get on track for this. And as I think of things that are happening during the week that affect Expert Dojo's potential domination or destruction in the world of accelerator and venture capitalists, I will just make a note of that word or that sentence beside that paragraph so that when I get to Saturday, I'm like, okay, cool, that happened. What do I do about it?
I like that. That's really, I know we're talking about financials here, but like at the end of the day, like processes and are kind of the foundation of everything we're talking about. So like that's some really good wisdom there. If anyone's listening, I would really pull that out.
Yeah, sometimes like the simple things are the best things. We get so, all founders, we get so busy. We're so busy. And we're running from one thing to another, to another, to another. We don't have time. I personally get, let me see, I have 140 emails already in this morning, just in this morning.
You are so good on email, which is mind blowing. I just want to say for someone that is as busy as you, it makes people who can't respond to emails look like something's wrong with them because you're like the busiest person I know and you respond to every email quickly, like shockingly quick in my opinion.
Well, I have a rule, email 0 every week. So yesterday at 8:30 in the evening, I don't like it to be 8:30 in the evening, but like yesterday at 8:30 in the evening, I was at email 0. And today I'm going to get better and I'm going to do text 0 by the end of today. That's my goal. Whatever I have to do, whoever I'm with, whatever I'm looking at, I will get to text 0 by the end of the day. And so look, I have those rules for myself, but what I know is this. I know that like from 5 in the morning to 7 or 8 or 6 or 7 or 5 in the evening, there is literally no chance of me being able to do strategy planning, scenario planning. It's impossible because there's too many things happening. But what I can do is I can make a little note in my Word document, which I always have open. Now, some other people might say, Brian, you should use a calendar. That's okay. Use whatever is best for you. Like, be you.
I use a paper planner. I'm completely paperless except for a binder planner. Like I kid you not, I do the same thing that you're doing, but like in an A5 planner.
That's it.
Yeah, like just find your tool. Whatever is your thing, find your tool for this. I agree.
And like that's it. You just work it, whatever's good for you, but you have to build it in. Like, and so for me, because I know that it is impossible for me to do strategy or any kind of scenario thinking during the day because of what's coming at me, I make a note that I'm going to cover it later on. And so to recap, like all of the things that we're talking, good old Sin Neil. I like that. He's such a kind man.
I wonder if the founder that called you and was like, too bad, so sad. I wonder if he had adjusted, and no judgment on him, whoever he's listening, we're sorry. I wonder if he had adjusted a few of these little daily processes. If I really think small daily improvements over time, Brian says this all the time too. We both say this, small daily improvements over time create large impact. So it's not about one giant sweeping movement you do on a magical Wednesday. It's about the little things you do every day that move. I always think of like a boat in the ocean. Like if you steer just 1 degree this way, but over a month, it's going to be over here versus over here.
Yeah. Look, the 3 things that are most important, I think this is a really, really important point, actually. And it's a really good summary point because it brings us back to mindset. There are 3 things really that affect whether you're going to build an incredible business or not. Like there's other stuff, of course, there's mindset, peak performance, and there's systems, and there's all those other things. But like really at the beginning, it's just your product, your outbound, and your conversion. It's really just those 3 things. You either have something which people really want and need, and that it's developing towards that, or you have something where you're like communicating that need in a really good way. Are you having something that you're like attacking enough people through the right channels, through the right person, right? And so they're really the only 3 things. Sometimes we don't have the right product. Like that's just the reality. Like it's not, success is not about building a unicorn. And I think it's harmful for people to, for everybody to believe they have these great unicorns that are going to be built, even if you get venture funding, even if you get funding from us, because your objective at the beginning is to find out as quickly as possible, do you have an adaptive outcome that can serve people in a way that can grow you to a scale that you can get to? Like that's all you're trying to work at. You don't have a choice between the three things. You have to do the outbound to get enough people hit. You got to do the conversion to make sure that you have the, like, you don't have a choice. You have to be able to do all of those things. But I think what happens is this: we all see a bunch of Netflix movies, and we believe that like a founder's life is supposed to be fighting our way through every single minute, and that's part of like the great thing. It's a part of it, and we all have this great product, and we just have to be the ones that make it to the other side. And that's just not true. And so because of that, our own mind won't allow us to say that actually there's something horribly broken within what we're doing. And so I love that you say that, because I think when you go back to the very beginning of what Kirsten said, which is your mindset needs to be from a place of mathematics, not from a place of just pure creativity. The great thing about math, it is literally the only thing in the entire world that does not lie. It never lies. It always tells the truth. Whether you like the truth or whether you don't, it's always there. So when you change your mindset at the beginning and you're like, okay, I need to get to, let's just keep it simple. I need to get to $1 million a month in revenue within the next like 5 years. Well, that kind of means I need to get to probably $100,000 a month in revenue within the next 2 years, or I'm probably not going to get there. Well, if each one of my products sells for $1,000, then that goes on every month. Let's say it goes on every month forever, right? That means I need 100 customers. And if I need 100 customers and I got to get it over 2 years, let's say I start slow. I need 2 customers this month. And if I need 2 customers this month, I go here. And the thing about like being a founder and starting from this position of pure math for everything, starting with the forecast, building it into probability, turning it into the models, having it based on then scenario modeling and adaptive modeling, and build all of that into a place where you're like, okay, the great thing about that is you never lie to yourself again. You know, you get out the other side and you're like, hey, you know what? I just didn't have a good enough product. That was the truth. I did everything I could on the outbound. I did the 1,000 outreaches a day. Nobody wanted it. I changed the messaging 17 times and built in 4 new ideal customer profiles. I still couldn't increase it. And so I just didn't have a good enough product. But this is what I learned from that. And this is what I'm going to do better the next time. It brings us all to a very humbling place, which is actually a very, very strong place from a mentality perspective, because we know. And when we know where the problem is, we are then better positioned to fix the problem the next time and come out with a product which is more adaptive and goes out. So I want to give you the final few words here so I can get your glory and your magic and make sure that everybody just hears like your biggest advice based on all of the entrepreneurs that you've been with. But I do think like just leading into that, as a founder, you want to get the math right. You only want to get the math right. Like this entire live stream is just about changing your mentality into a place of being a mathematician. If you are a mathematician, you'll never be hard on yourself again. You'll understand that nothing is your fault as long as you're following the math. But you got to change to that place. You have to have everything in writing. You can't have it so that it's hidden away somewhere or it's in your mind. In my world, that thing that's in writing is on a big visible thing. We have a huge, big target in Expert Dojo. Everybody sees when they come in. There's no like, and not only that, I have people's names by every single one. You miss it,
Nice.
it's on you. You're the only one. So yeah, Kirsten, what would you add to that? And then obviously I want to make sure everybody can contact you to speak with them. But the more I go through this call, the more I think to myself, everybody should have a modeler built into their team, even if it's someone who's like an hour a week or an hour a month, who just brings us all back to that place of math and just say, relax the head, Brian. This is what you need to do next week. What scenarios can we plan to make sure that it's different from last week? Because it's just time.
Yeah, agreed. We should do more of these. We should hop in. We should not saying it just for me, but like I think that this is a wonderful thing to sprinkle in to startups as a gentle reminder. Seasoned serial founders who've fundraised multiple times know this, and most of them have learned it the hard way. They learned it because their first startup was successful and they had to implement this at some point or die. So when they do their second one, they usually are handed money quicker because investors know that they've learned everything that they need to know as a founder, usually already. And this is one of those tools. So if you're a first-time founder, shortcut the path to success by realizing that this is a standard action for, like you said, bootstrap businesses and also fundraising startups. And then the other point that I want to make is it is for everyone. It's not a mysterious black hole. I can walk you through and help you connect the dots and see how practical and common this process is and how tangible and how you can actually do it with your business. It doesn't have to be, it does take a little bit of effort. I call the hardest part about it decision fatigue, when you're trying to assume like how things are going to go. I think that that's personally, in my experience with working with clients, that's where the most frictional part happens. But you just got to push through that. And I can cheerlead and push people through that, be an accountability partner and say, good, go research the churn rate for your industry. Like go research, the ROI on the avenues you're thinking about, and then go brainstorm a few other ROIs. Like I always make a joke because this doesn't apply to most people, but I always be like, will a pop-up shop make a difference? Go do a pop-up shop. Like, were you thinking of that? Can you, land in someone else's existing business and show up there and sell your product and stuff like that? There's all these clever ways, those growth hacking ways that we talked about at the growth hacking conference. There are so many success stories if you just Google growth hacking for existing successful businesses that they just thought outside the box and figured out how to hit those numbers that they said that the target that they need to make. So I want to reiterate that it is just math. If you take your ego out and you just put the numbers up there and say, if I want this type of company, whatever goals you have there, how do I reverse engineer to get that? And it's just step by step. And there's only a handful of components. It's not this never-ending PhD level curriculum of like, how do I get there? It is, literally a handful of things that you would reverse engineer to get to. You throw it up there, you go after it, and if you don't hit it, instead of when Brian was saying you'll learn the next time, I actually say you can catch it quick enough in your own startup and pivot rather than necessarily having to shut down and have to start a whole new startup. So I think if you do that could be the make or break of your startup.
Yeah.
So
lots of really good comments. Yeah, lots of really good comments coming in. I just want, like, I really like this conversation. I think it's really nice that we're going into 2025. It's super close. I will tell you, 5 months ago, when, not that I knew that Trump was going to make it, because none of us really knew, but we felt that there was change coming and there was a need for alliances to be built. I felt there was going to be a huge alliance going to be built with India. I still feel it's going to happen. Nobody else has talked about it, but it is scenario planning that I'm doing. What do? We opened up in India immediately. I know China are not going to do anything for the US. I know Russia are not going to do anything for the US. By the time NATO start paying, then Europe ain't going to be doing much for the US. Latin America is always going to be the same, a weird, difficult relationship that the US has. India, 1.2 billion people, the most obvious in my mind scenario planning possible. It is something that will pay dividends in 5 years in the future, not today, but that we immediately sent Ash over there to open up our office. What was the first thing we did when Trump got in? We created a crypto conference. We're going to do our own conference. Why?
Nice.
Because we knew crypto was going to go crazy. So anyway, look, everybody, Kirsten, how can people contact you?
You can contact me through the website, vertconsulting.com. I don't know if we can throw that up there.
Yeah, give them an email or something. Give them an email so they can just email you.
And then, so it's tricky. Vert means green in French, green for money. So it's Vert Consulting. It has E, so it's info@vertconsulting.com. But I'm going to spell Vert. It's VERTE consulting.
So VERT consulting.com.
So it's like the French version of green. So let's get you some money.
Yeah.
I just want to point out as a final thing, money without morality is worthless. So like my final little note is like there is ethics in business. So like doing a financial model makes you be ethical, makes you really look at like, am I doing this the right way? Am I creating a product that customers love? I'm not tricking customers to buy my product. Like this is something that people really need. Or like he was saying, you suddenly realize you're not hitting, you put all your targets, you're not hitting them. You put all your targets, you're not hitting them. Pivot. Just pivot. Like there's so many amazing stories. Yeah.
They get it. The most ethical bunch of people on the planet. They know how to pivot. But look, you have all of the rules there. You've got everything underlined. You know what to do. You know about your scenario planning. You know about the mindset. You know about everything around math. 2025 is coming up. Within those scenarios, you should be looking 1, 2, 3 years out. You know that you should be building out forecasts around all of this for next year. You should hold yourself hard on the forecast. You know that your end number is going to turn all the way back into the output that you do at the very beginning and at every stage in the middle. And you know that you should be giving yourself a defined timeline for your company to be successful. But if you don't start from a place of math, you are going nowhere. Okay. Thank you, everybody. Thank you, Kirsten. You are amazing. We are going to be back next week. But in the meantime, go out there and build incredible